Okay, so welcome to Walk Away Wealthy. I'm your host, Alan Terrell Gregory. If you're thinking of selling your existing business or looking to untangle yourself from your old business so you can start a new one, you came to the right place. Today, I have a very special guest, Byron T. Deese. Welcome to the show, Byron.
Good morning. Good to see you.
Same here, same here. So, tell us a little bit about yourself.
Well, thank you again for having me on. I appreciate this opportunity to connect with your viewers. Again, my name is Byron T. I'm a wealth manager with Glass Jacobson Wealth Advisors and oversee our exit planning division, where we provide tax, investment management, and planning financial services for business owners and retirees, really throughout the country, but our offices are in Owens Mills and in Rockville. And recently I opened an office in Lake Mary, Florida. And so we, in many ways, we're focused on working with business owners, helping them to plan and strategize for their business, but not only for their business, but really to better understand their portfolio and provide a coordinated wealth management strategy for them, which includes the services that we provide. And as you know, there is the case of business owners who are building their businesses, hiring people, doing great things for the local economy. But in many ways, they don't fully understand how to exit, if you will, from their business and how to exit at a premium. And so that is the important piece for us to make sure that we're providing that type of guidance and service, as well as the tax strategy and investment management necessary to help them fulfill their long-term generational wealth goals for the family.
Absolutely. So I've heard a little bit about taxes. So someone told me that one of the most important people to have in your whole exit team is to have a tax planner, because how you exit could be things could happen differently. So if you don't exit properly, you could end up paying more tax than less. Can you tell us a little bit about that?
Yeah, it's very true. I mean, tax is the cornerstone of everything. You can have great intentions for things that you're hoping to do and accomplish, but if you don't understand the tax implications, at the end of the day, it's important that we know that any type of effort to pursue a profit, there is a tax implication. And so if we can at least just think about it from a bare bones perspective, that if I'm trying to make an effort to earn $1, that there is a tax associated with that effort. And so, but also comes tax deductions associated with that effort. And so it's important to have a tax advisor really partnering with you in that process. Because if not, then you'll go about, again, well intentions, maybe have actively accomplished the goal of maybe selling a business or having a good liquidity event, but weren't prepared for either the front end or in many cases the back end tax implications that come with that that sale or that proceed to you and your business.
Good. So let's go back a little bit. So tell me how and why you guys started helping business owners with retirement specifically.
Well, it's interesting. So, and if we can go even further back. So, I studied finance at Tuskegee University, and my first job out of college was in private banking in Baltimore, and spent the past 20 years in financial services. I would say probably around 2007, 2008, I shift really to focus on retirement and in the retirement space, and started along those lines at Lincoln Financial Group, working in the retirement business, and then moved to, and that was in Philadelphia, moved back to Baltimore to work for Legg Mason, and we were providing institutional investment management for large pension plans and corporations, really in many ways to manage the investment assets for retirement plans. And then around 2012, I went to work for a retirement plan company called Mutual of America, and we provided 401k, 403b pension plan services for the nonprofit and small business communities. And that was really where I really dug deep and decided that this was the area I was going to spend the rest of my career, really helping. Particularly, I found a great interest in working with small business owners and helping them to fully maximize the fact that they chose to become an entrepreneur, but how to have the same benefits that many of the larger corporations have, and take advantage of how to employ those strategies for a small business community. And so it was a great way to really dive deep into the nuances of employee benefits and plan design for retirement plans. And in 2008, I went to Glass Jacobson, which is a tax advisory firm, which has roughly around $1 billion investment management RIA associated with it. And I went there to really oversee their retirement plan division. But it was a great opportunity to connect the dots associated with tax, investment management, and financial planning, which at that time there wasn't a properly organized effort. And so we built a new financial planning division. I personally specialized and focused on working with small business owners. And 2020 really created an opportunity because many of my clients were at the point where they were really spooked by the coronavirus, if you will, and their attention shift from the business to the family. And it gave us an opportunity to really have conversations around exit. But the truth is, we didn't have anything in place that would properly help them to exit at a premium. And so around that time is when I got associated with Exit Planning Institute and did the SEPA exam and became a SEPA, and really employed some of the value builder strategies that would help a company identify what makes your business attractive to an investor. And you may think you're running a great business that may have taken care of your family. You may think that you're on the top of the world because you built something from scratch. But how does your business look when someone else is taking a look at it for the purpose of acquisition? And that's really where the rubber meets the road to identify what type of multiple that you could ultimately sell for. And therein lies the exit planning division that we launched effectively in 2021.
So can you tell us some of the things that make a business attractive to investors?
Well, you think about it, if I'm an investor and I'm looking to buy a business, my first thought is, how much work do I have to do if I were to buy this business? If I have to buy the business and then completely restructure the operations and hire new staff and create new contract opportunities, I'm not looking to pay a premium for that business. I'm looking to buy that business at a discount because I know there's a lot of work that needs to be done. More investment needs to be made to fully operationalize the business for profit and to take it to the level where I truly think it should go. And that is really where it begins. So the question is, if someone walked in, can you just pass them the operating agreement and say, get to work? Or will they have to actually do a lot of work to get it going? And so it is important to make sure that the business is properly staffed. It's important to show that the cash flows are on an upward trajectory. It's important to uncover what some of the challenges are in the market and having multiple revenue streams. These are the things that an investor would say, wow, like I want to be a part of this. And it looks like even if I make this investment, I really don't have to think about the growth rate because it's clear that you're headed in a direction that ultimately will be profitable for my portfolio. And so those are some of the things that we want to take a look and make sure that not all of the operational and institutional knowledge is in one person's head. Is it really a risk if that person gets hit by a rock? Is this business over? Being able to begin to unpack some of those questions to see just how stable and strong this business really is.
Can you talk to us a little bit about standard operating procedures and company culture?
Yeah, I think it's important that you have, number one, an operating agreement that shows you how this business is run. From the standpoint of the operations, who do we contract with? Who are our current vendors? Who helps this engine stay afloat? If one piece of the engine is pulled out, what does it take to replace that? Is it just really being able to fully understand customers, vendors, accounting systems, the investment strategy, and more importantly, do you have key people there who can actually do the job without the CEO or owner being there. Can you go away on vacation for 2 weeks, not and turn your phone off and worry that when you get back, you're going to be out of business? If you can't, that's a great test to see how operationally sound your business is can you go on vacation? And if you can't go on vacation, you pretty much own a job. You don't really own a business that's operating on its own.
So are those things something that you help business owners with within your engagements with them?
Definitely so. We focus on number one, setting the goal of identifying what is your end game. What is it that you're really hoping to accomplish, not only just in business, but in life? And we lead with more of a generational wealth approach. And so we want to make sure that the revenues that are coming in are not just specific to today, but it does play a role in generational funding for kids, grandkids, and furthering, maybe providing supplemental capital for the business long term. And so when you have that kind of mindset where you're looking to build a business that will outlive you, or at least to have a portfolio that will outlive you, because it could be the case you may become an entrepreneur in multiple ventures. So we're still going back to the overall portfolio and how do we continue to provide an expected rate of return per asset class that will give that business owner really confidence that this portfolio will last. It's well diversified. It's not all in one particular sector, and if something happens to the economy, that it's wiped out. So we really take you from that point of identifying what the big picture is, and then begin the process of working on each asset class. And in many cases, the business, especially for the small business community, the business represents the largest growth rate, if you will, for that portfolio, where we may have it mixed in stocks, bonds, mutual funds, guaranteed products, annuities, things like that. But the ultimate objective is to make sure that the business grows at a certain growth rate and represents and really does its job for that asset class of the portfolio.
So that means there's planning, then there's the liquidity event, then there's the wealth management. So is it those 3 steps? Is that what that looks like?
That's exactly right. And there's a tax overlay in each part of that strategy. So the first part is the family planning. The next part, really goes into the business and making sure that the business is operational and really identifying what exit looks like. Maybe it could be you're keeping the business, passing it down to key employees or family members, but you remain a dividend owner, a shareholder in that business, because it may be a part of the portfolio long-term, if you will. And so, but at the end of the day, we want to identify what does a real retirement look like? And could it be a shift from for-profit efforts to nonprofit efforts? But there's still capital coming from the portfolio to fund each of the operations. And so, so planning plays a big role in making sure that there is an adequate flow. It makes sense. It's transparent, not only to the owner, but to those who are going to come behind the owner and understand how to drive or steer the ship, if you will. That's going back to the standard operating procedures. That is a big part of it. But for taking a look at the end game and the long-term strategic objective for the business owner, it's important that we see where we're going and what the steps are to get to that point.
So how do you deal with identity issues with the owner? Because some owners, their whole identity is wrapped up in the business. And if they sell their business on a Friday afternoon and don't know what they're going to do on Monday morning, they're probably going to get cold feet at the closing table. So how do you work that out?
Planning is a big part of that. I think that the first part of the engagement, there has to be really and excuse my colloquialism here, but almost a come to Jesus moment, if you will, to say, what am I really doing here?
Right.
And what am I really, like, if I go to work every day, why do I go to work every day? Mm-hmm. If I'm trying to reach a certain asset class, why? What's going to happen when you have those resources? And I always tell people to, as you're in that last 10 years of heading toward retirement, it's important to begin to touch and feel and experience what your retirement life will look like now. So let's start doing some of those things now. And that's going back to the stress test of the business. If I can't go away for 2 weeks, then I'm not in a position to sell my business. So so purchasing homes, at your favorite vacation locations, beginning the process, maybe say Airbnb-ing a property that you purchase and own for 300 days out of the year, and take another 65 and you go and enjoy it with your friends and family. Being able to test the waters to say, but what happens if you enjoy it, you say, wow, I can't wait to get down there more often. Or if you go and say, I don't really like this place. I thought I was going to love it, but I don't really enjoy this. Now we begin the process of testing out other locations, and your thought process begins to morph in those areas, and more on that and less on the business. That's a nice, I would say, progression to shifting from one main focus of the business to the main focus of leisure and passion-driven projects. A big part is we include more of creating a foundation for the family and for the business, and mixing in that foundation with your favorite charities and the things that matter most to that business owner and the family, if you will, and get them involved in participating in those things that they really wish they had more time to support. And then ask those questions, why do I care about this charity? Why do I care about this organization? Why do I care about providing resources and supporting that? Then they go back to their childhood, if you will, of what their grandmother or granddad did that sparked the interest in a certain area, or they may have lost a family member due to a health issue, and they want to go heavy into supporting that health issue to raise money to make sure other families don't experience that. So really beginning to shift their thoughts into things of passion and leisure versus the day-to-day of running the business and operations.
So that's interesting, because it makes me think about exit options. I know that a lot of people think about potentially handing the business to their children, or potentially passing it down to the management, or maybe a third party sale. So can you touch on some exit options for us?
Yeah, I think that's also part of the planning process. I have a client who, he's young, has recently turned, I guess, maybe 40 or 42. And, when I ask him that question, he's like, I'm never leaving this company, right? But at the same time, he cares a lot about his employees and making sure his employees are solid and they're set and they participate in any growth of the business. And so, we've set up strategies to look at having an ESOP company where the employees now own the business. And you can do all the things that you were hoping to do, because the thing is, if you're not really trying to sell the business right now, and you don't particularly want a private equity or some venture capital coming in and wanting to shift the operations in a way that may be outside of your objective, but now they may be a minority stakeholder, owner of the business, then ESOP may be the way to go. When you're thinking about the private equity of the world and the venture capital, and even some of the strategic partnerships, in many cases, you're trying to sell and identify a premium, but ESOPs is a market rate transfer. And so it's one of those situations when you want to still participate for some time, but you want to make sure that things will still stay afloat and the employees participate in the growth of the business.
Okay, so this makes me think about another question here. So how much time is needed to plan and execute a successful transfer of the business?
I would say a minimum of 12 months, but really you should have it, a lot around 24 months to do it effectively, because especially if you are hoping to sell, if you will, at a premium, you're going to want to make sure that the operations are sound and ready to go for the next team to come in and to increase your multiple, do all the things necessary to be identified as, say, the best in class of your industry. And, they can just take the keys and it's still running, so it's, in many cases, there's some tweaking and investments that need to be made to prepare for such a or more of a restructure of the operations to be ready for that.
So a lot of people engage a business broker because that's the first thing they think about when they want to sell their business. What's the difference between your services and mine, and that of a business broker?
Well, I would say a business broker is if you're really at the point where you have to sell right now, you really don't have the time to do some of the preparation work, and you're hoping to increase your EBITDA, and you're looking to increase some of the or strengthen the operations of the business, and you're just at a point, I need to sell this company within the next 60 90 days. Then yeah, a business broker can bring their Rolodex to the table and identify potential buyers, and really get you to the transaction point in a fairly quick way. We're really not in that business. We focus more so on planning and preparation, and putting you in a position to prepare for a sale. But we would want to ultimately, and in many cases, we'll have folks who will call, or we may have clients who ran into kind of a tough situation where they have to sell. Maybe one of the partners passed away, and they could become insolvent and not be able to keep it going. So those types of situations, yes, we could definitely help in that case. But we want to be a part of kind of that planning process to help get you the proper value for the business.
So would you say it's better for owners to begin working with you before securing the services of a business broker?
It's very important to work with a planner, if you will. I highly recommend our strategy because we're infusing the holistic, coordinated wealth management into the process of business valuation, growth, and exit. But there are a host of folks who specialize in helping businesses prepare for an exit, and even the value growth consultants, if you want to keep those worlds separate. And even I also recommend bringing in a business advisor, if you will, who understands how to lead a team of advisors and make sure that everyone understands their role in this particular growth story and exit story. Because the last thing you want is competing advisors, and they're like, oh, he's trying to get this piece of the deal, and I was hoping to get that. You want to make sure you have someone who can coordinate the deal, make sure everyone knows exactly what role they play, and begin the process of taking that to market.
So what if a business has a CPA? How do you kind of come in, and because that's usually their most trusted advisor, how do you come in and manage that relationship if they're going to be working with you?
Well, ideally, because our firm, we're also an accounting firm, and so we definitely want to lead and try to leverage our team internally. But if they have a trusted partner on the tax side, we want to make sure that they understand what we're working on and what the goal is, and what some of the changes that could very well affect the bottom line, and why it's happening, because it may be different from the past tax returns, and really understanding what role their CPA does, if they're just a tax preparer and they handle the filing, or if they're a tax advisor guiding them through the day-to-day operations of that business. We have to have those kind of clear, specific types of conversations, because we don't want to, when you're prepping for a sale and your CPA has never prepped a business for a sale, then they may not be the best fit to actually be a part of that group. And they may very well, continue to do the tax return, because in many ways, the tax advisors in many ways are trying to get out of the tax preparation business. They want to stay on some of the higher revenue opportunities, like prepping a business for sale. Mm-hmm. So definitely, you want to make sure that they have the skill set for that type of role.
So another question here is, what characteristics do your best clients exhibit?
Well, I think it's important to have a target market. You don't want to be in a situation where you are, competing, or I should say, working with just anybody. You want to know, like for me, 70% of my clients are 8A government contractors. So that's a specific space that I know and understand, and helping to guide them through that process. We do have other clients outside of the government contracting space, but if you are someone who says, hey, I run a construction business, have you ever helped a construction company prep for a sale? And if I haven't, then I make sure that the team of advisors have that book of business, have that skill set. I may just be the person guiding, managing the assets, guiding the process, but making sure that all the other players can really provide their expertise and depth in that space, in that field of interest.
Nice. So what's your best advice for someone looking to sell their business or transition to a new one?
Yeah, I would say quickly, you want to meet with someone who understands business valuation and exits, who can talk through the next steps, where you are, what the goals are, and then what the next steps are. And, putting yourself in a position to really do a nice, I'd say, evaluation or analysis of your current operations can kick the tires on what's really going on now. And it's going to point to a stress test per revenue area and division of the business to see, what's strong, what's weak, what's lacking, and to be able to kind of provide some proper recommendations for to really tweak those areas.
Yeah, because I find that most business owners kind of want to lead with what's my business worth. So I'd imagine that that's one of the things that you begin your engagements with.
That's exactly right. In the worth factor, we have our own internal business valuation team, but we can also do a preliminary valuation on the business based on just answering a couple of questions. We have a questionnaire that we can provide you that really highlights just what your readiness is, if you will, of selling the business. And so you want to go through that kind of a process early on before you take it to market. So the sooner the better to get started, to make sure that you're not just jumping out there cold feet and end up really receiving, a discounted sale. And that's the last thing you want to do.
Understood. Okay, so we're wrapping up here. I just got two more questions for you. So what's one of your favorite quotes and why?
Oh, that's a great question. I have a lot of them that really sticks with me. But I always think about my granddad, who would always talk about success is not the destination, but it's the journey. And so when you think of making the things you're doing every day, those successful mindsets, successful activities, successful things that are helping you to move toward a particular objective, I think that's the one that stands out. And I really try to remember, even on those tougher days, so, this is part of the successful attitude and actions that we have to do, even though it doesn't feel so well today. I know I'm doing this to add value to the overall goal that we're moving toward.
Nice. Okay, and how can our listeners get in touch with you?
Yep, definitely. Please, I would love you to reach out. You can reach me. My email address is byron.deese at glassjacobsonia.com. You can reach me by my phone number, which is 407-709-8791. I'm on social media as well, LinkedIn at Byron T. Deese. So please feel free to reach out. Would love to have additional conversation and learn more about how we can be supportive and help you through this process.
Okay, and for our listeners, we'll have all that information for Byron in our show notes. So Byron, thank you. Thank you for your time, and I appreciate you coming on today.
Thank you.
All right. Okay, so I will stop the recording here. Do that.